What's up, traders? It's time to do our homework with weekly levels for the markets. We're going to start with stock indexes, talk cryptocurrencies, oil, bonds, US dollar, and then we're going to look at a little bit of sector rotation. All right, so let's take a look at the S&P 500. We're going to use the ES, which is the E-mini futures. And one thing that I really enjoy and rely on is using Ichimoku as a trend following analysis. Let's overlay that right now. So as we can see all through this weekly chart, price is going up, up, up. And this is really the first time that price has breached the green line. Now, normally in the very strong days of the trend, it holds our Tinkinson, which is the 9 period, and it almost never closes below that. Should it close down below it, we then find support on the Kijinsen, which is the 26 period. But as we see here, we've now closed below that level pretty decidedly. And so the next obvious level for price to go down to would be to test the cloud, the weekly cloud. That's the direction that I believe that we're going. And that matches with what we can expect of what's going on right now in terms of a correction. So a correction is defined as a 10% down move from the high down to wherever it stops. So if we go in here and we take a measurement from the top, we've moved down about 8.8% roughly. So we haven't done the full 10% correction. A full 10% correction would take us down to the cloud over the next few days, depending on when it happens. That would also take us to these lows that we set in October. And so all that sort of lines up to a good target for where this can go next. Now, what I would expect to see is it to possibly pull up to retest the lows back here, basically create a support turn resistance, maybe around the 450 SPY range. And then at that test, we might continue it and we might get that second leg down. That would really wash out a lot of the bullish optimism, I think, that was in this trend all the way from the 2020 low. And we just really needed a good, healthy pullback to get some of that rampant optimism in check. And I think that's what's going on right now. To look at the NASDAQ, it's, of course, going through a pullback of its own. Last week, I noted that we had held that support, and it could have held, but instead it closed down below it. Now, this is also trying to make a run down to the cloud. And so if it hits the cloud right around here, which is probably a past all-time high back from April, that's lining up pretty nicely. Price being volatile as it is, it may overshoot this, but it's becoming kind of clear where this thing wants to go. We have a few more percentage points of movement down, I believe, coming into this week. One of the things that we can look at to really see what is going on under the hood is the Vix, the Volatility Index. And volatility can be a very good indication of timing of the market. Now, coming into last week, we had a hold with a VIX at 2186 right here. This was on Friday, more than a week ago. And then the first day of the week, price closed above that 2186 on the VIX. The next day, Wednesday, it came down, held it, and then Thursday held it, and it launched. And so now what we're doing is we're getting into this volatility range up here. So where I've got it marked off here where I'm looking at 2984. That is a past level that VIX has spiked against back in February and January, February and March of 2021. So at some point in here, we need to see a VIX spike out, and that could potentially be the bottom of the stock market. So be watching for the VIX to have some spike that's going to get people really afraid. And at that point, see if it'll match up with the indexes and you may see a bottom on the market. Now, let's talk cryptocurrency. So, Bitcoin, it has been bearish. I've been talking about it bearish all the way since December the 4th. I know a lot of people have thought that these were opportunities. They were not. The death knell for cryptocurrencies in general was really back in November when you failed to break out. Basically, you had the all-time high of April broken, but then closed below in October. That was a warning sign right there. And then you had this weekly bar in November, again, try to make new highs and fail. And so you really should have protected yourself back then. I know that's hindsight, but I say that just to let people know that sometimes when you look at price action, even if you want to be a do or die hodler, it can help save you about 50% of your wealth. So where are we now? Well, believe it or not, if we go from the COVID low up to the all-time high, we don't really need Ichimoku right now for this. We can just see that we have found support around this 36K. We're also at this range that it made in the summer of last year. I have been saying for a while that I think this could shape into a head and shoulders pattern. I do expect a relief rally from this point. I think there's enough despair, enough weak hands being taken out that this is going to create a bottom, a temporary bottom. It may take a few weeks to develop, just like it took a few months back here, but I think that we will see a relief rally. I do not expect this relief rally to hold, though. So some may come back and say, oh, well, you said that this was going to go down to 17K over the next 2 years, and now we're back up at 40K, 48, and okay, cool story, bro. The only time that that's the crypto numbers. The only time that I'm going to get interested, and I will say it publicly, is if we can get back above the cloud with confirmation. And as this trend continues, the cloud keeps moving down. So if we can now get back into the 40s, sometime February, March, as time may be, then I would say, okay, now we have a chance to go back through the top. But for right now, it's very risky to try to catch the falling knife. Same goes with Ethereum and all the other cryptocurrencies, which tonight are not having the same kind of move that they've brought them down here, but they're trying to retest the low. And so this, of course, has been bearish since December. And on Ethereum, it also has reached a support. It has also reached a retracement of the whole move up, the 50% retracement. So I do expect us to see some kind of a price action response here. And that will be my analysis going into this week and the next few weeks as well. So oil, let's move on to commodities. Oil, this is the future, oil futures. I traded many years ago, back when oil pretty much hung around its range for many years, and $100 a barrel was sort of the point of gravity, the center of gravity for where the price liked to hover around. It's a nice psychological level. And so I really see this trend over the next few weeks and months making its way back up to that level. So I think that oil stocks are going to do pretty well. I think that long energy is going to do quite well. And this trend is bullish. Again, as we talked about with the stock market, where we needed a bullish trend to do a pullback to the cloud, it got that back in November, and it held to continue upward. So this is the kind of thing that I like to see with Ichimoku, where it holds the cloud to confirm that the trend just had a major correction. Bonds. Last week, I remember putting in a potential bottom going all the way back from March of 2015, and that weekly bar that we had last week pinged it, and looks like it rose pretty sharply off of it. And so I think we have the potential for a double bottom reversal here. And so I think that might be what we can see in the bond market. DXY, which is going to be what we use to see the US dollar. The US dollar is still trying to break out on the weekly, got itself out. But the daily trend, again, did a pullback to the cloud here. And I think we could probably see it retest the top. And if it does that, then that's going to get it trending on the weekly. So despite all the protestations that the dollar was going to fail and be hyperinflated relative to other currencies, it's actually doing pretty well this year. So sector rotation is a theory that looks at different sectors of the economy and how they perform relative to the market as a whole. And so what has been interesting as we go into this year, of course, energy stocks have been leading. And if you see in theory, at market tops, energy stocks should lead. Prior to that should be materials. And we saw that with lumber and copper and all those sorts of things. What has really been winning going into this year is consumer staples. And if we go here and look at that's healthcare XLP. Consumer staples have very much been winning ever since we rolled over into here. And that's where people were putting their money to safety as the market started rolling over. So we can see that as well. I'm really watching to see if we get some sort of healthcare opportunity coming into the next few quarters. So as far as the stock market goes, that is actually what I'm looking at. So that's what I'm going to be looking for this week. I'm going to stop being so bearish on Bitcoin because I do think that we should see a potential relief rally, but I do believe it will be short-lived. So I'm not looking to load up a lot, but I'm going to be a contrarian, and I'm going to look to see on Twitter when people are really despairing. There's still a lot of optimism and hope out there. And really for Bitcoin and anything else for that matter to bottom out, you have to have the complete abandonment of hope. That's just the way that the psychology works. Don't get caught up in the hype. Trade wisely, guys. We'll see you in the videos this week.